Hi, this is Zach Meir from Master Investor with a look at some bulletin board hero stocks on Thursday, the 5th of March. Starting off with Central Rand, where we see that there's been decent reaction from the 50-day moving average at 13.26 pence, the blue line here, and all of this within a rising trend channel from November. The rally here started with an unfilled gap to the upside through the 50-day moving average, and that's still in place. So the message at the moment really is that while we hold the 50-day line, there should be decent upside there. Obviously, the February spike up to 20 pence would be the initial target, but we could see the top of the November channel at 30 pence over the next 2 to 4 weeks, and a reasonably good risk reward ratio on this, given that the notional stop loss would be just below the 50-day line. Forte Energy has been a bit of a nightmare, let's just say. A great spike for the shares in January, but since then we've had quite a sort of painful retreat. The view at the moment is that we are holding a support line from November. That's running through around the 0.16 level. If you're cautious on the shares, and probably you should be after all that's happened in the recent past, you'd probably be waiting for a buy trigger. Probably the favorite one at this point would be a clearance of the 50-day moving average at 0.2 pence. That wouldn't give away too much of the notional upside, especially as we're looking for a retest of 0.5 pence plus over the following 1 to 2 months once the 50-day line is broken, and obviously the stop loss there just below 0.16 pence, which was also the late January support zone. A stock which has been looking rather sprightly over the last few sessions is Golden Saint. Seems to have returned to form in quite a spectacular way. The giveaway here in terms of whether this is a proper buying opportunity or not is really the 50-day moving average. That the reaction to the stock around that blue line currently at 0.39 will sort of give away most of what the mystery is here. Saw failure at the 50-day line at the end of December, and normally in downtrends the 50-day line does actually just break down any attempts at a rally. This current situation is looking encouraging in the sense that we've had a decent close above the 50-day line. Maybe we need another one later today in order to sort of confirm that this is a recovery that has legs. But if you're already in the stock, 0.35 was the old low from January. And while we hold above that, one would probably be comfortable in holding on to the situation. Top of a rising trend channel from November is at 1.3 pence, and that is currently the best case scenario target. The only real sort of dynamic stop loss here would be back below the 20-day moving average at 0.22 pence, but obviously that's a long way away, and that's why I've suggested 0.35 pence as the initial or at least warning sign in terms of risk management. Next up is Oilex, which was a favorite last year, probably a long time ago last year, on the way up going into the summer. Since then, there's been quite a painful retreat from the shares. It looks as though we've got the first signs of recovery here, but as I mentioned in the case of Golden Saint, it's the 50-day moving average which will be key here. We need at least an end-of-day close or two above the 50-day moving average, 2.14 pence. The RSI has broken back above 50, which is a decent initial sign, and so some aggressive traders may wish to go along on the basis of that, with a stop loss, say, back below the 20-day moving average at 1.88. But it really doesn't look as though one should probably be waiting for the 50-day line to break, especially if that does happen. The target here would be up towards 4 or 4.5 pence at this November-October resistance line projection. So worth putting on the watch list at Oilex. Situation which is perhaps more in play at the moment is Richland Resources, where we've got this decent consolidation. It looks like a V-shaped bull flag above the 50-day moving average at 1.78 pence. If you're an aggressive trader, you've probably already gone long of this stock yesterday. Otherwise, it might be worth waiting for an end-of-day close above the 200-day moving average at 2.4 pence. That would break February resistance and give us a sort of a reasonably robust type of signal on a technical basis. The target after that would be 4 pence plus, which was the summer resistance for the share. Stop loss back below the 50-day line. That's it from me. More updates at masterinvestor.co.uk.